up, everybody? Welcome back to Royal Blu FX. In today's video, we're going to talk about the trades that I've taken today, which is a Thursday, January the 25th. We're also going to reflect on some of the other trades that we've taken, I think, in the last couple of days, which I will refer to on this video. You'll see the dates and times, of course. What I'm going to show you is the trades that I've taken on GBP USD, specifically on the London session. So if a lot of you may know, the way I trade typically is just trading the day session, which means I only trade the session, right? The current day session. I don't trade, wait for the sessions to pass by in terms of looking to trade something in the sense of like, let's say, for example, I'm on a daily time frame or the weekly time frame and wait for something on the weekly or daily to come in tap, right? I just trade the day session. So typically when the session opens, we wait for price to begin, right, on the open, and then we then start to anticipate what price will do on that day. Okay, so without any further ado, let's begin. So today is the 25th of January, right over here. This is what we traded today. I normally start on the 30-minute time frame. I think a lot of you guys know why, but the biggest reason why is because the sessions don't run that much, obviously, right? I'll come and show you guys proof here, right? If you're on the 30-minute here, you can see right there on the 30-minute. This is the London session right over here, right? All the green is the London session today. The London session did not move as much for our obvious reasons here. You can see here London moved very nicely, and here as well, right? Which we'll get to these, which we'll get to this later. But yeah, this is what we traded today. So let's begin starting from here. I'm going to take these sessions off, and you'll see what I just did here. So when I look at supply and demand, right? We trade supply and demand. That's what I do here. I zoom out, right, and I make sure I mark out all the supply and demands that are, that make sense typically for what I'm about to trade in that day or for that current day. So obviously, right here, you can see there's a huge supply zone, right? It's pretty big, in fact. And we mark this out, right, and at any point in time price can always bounce into supply. So what I'm always looking for is when price comes into supply, obviously, to get a response or some sort of reaction from this supply zone, right? And there's more reaction right there, as you can see. Anyway, so I mark out the the correct supply and demand zones that I'm going to be trading in that current day's session. And then I go zoom in here just like this, and I start marking things out like this, the supply and demand, based on where prices have flipped. So like here, for example, you can see there's supply here, right? Then we had some failed supply to demand, right? And then price came back to this area in here, right? So and then from this point on, we're looking for prices to rise, right? So once I noticed that we were in this area here, right, I noticed that we were looking to buy today. We weren't looking to sell. So you can see from this high here, there's your failed buy to sell here. So this is considered a flip zone, right? This is a weak demand to supply. So we knew that there's going to be some reactions in the supply zone. Now, normally when you're probably asking me, why do you have the Fibonacci levels here or whatever? It's not the Fibonacci really, but it's the EQ level, right? And the pretty much the zone level, the zone levels. And the big reason why I have this is because whenever I target, let's say, supply or demand zone, right, I normally target the outside area, the outside part of the zone, right? I don't target the inside part of the zone. A lot of traders tend to typically target the inner part of the zone, like the 50 EQ, maybe even above, like there, right? And so what I've typically found out that's really much more safe and conservative is to target the opens, the outer part of the zones, excuse me. Okay, so we use this tool for that specific reason, just so I get an idea that price could go into the 50, but most of the time price just comes in here, right, in the outside part of the zone, and then just reacts the way it just did, right? Now obviously you can use your supply and demand zones just like that. This is just as well. This is just as good, right? Anyway, so let's go back and just delete this off right here. We're gonna start at it's 3 p.m. London time, right? This is what we saw when price before the session opened. Okay, now mind you, I trade the opens of the sessions. That's as soon as price opens, my mind has to literally find out where the next supply and demand is and where price is going to react to next, right? So a lot of you know when you trade, you're trading reactions, right? We react to price. We don't act on price. We don't tell price where it's going to go, where it's going to, where we think it's going to go. We wait for price to do something, then we react to price. So therefore, everything that we see in the markets are reactions. Okay, so let me just zoom out here. You can see here there's a low, there's a high, right? I also did the liberty here to mark out this buy to sell in here. I don't know why it's shifted there, but maybe on a lower time frame there was a high in there. But here's a buy to sell, okay? And this area here tells me that this is another supply zone. When price broke this low, it was never mitigated here. So you can see there's a high there, another high there, right? So there's a lot of liquidity left here for this supply zone to be tapped, right? And then vice versa. So what I typically do is I look for supply and demand. I gotta always see where supply and demand is at all times, okay? And the reason for that is because, if you're buying, you need to know where the sellers are. If you're selling, you need to know where the buyers are, okay? That's how the theory works here. So now we found out where all the sellers were. You can see right over here, prices were selling, right? And we found out that this supply zone here was not mitigated because when price broke, price bought and sold. So therefore, this was the last buying pressure from, or the last failed demand that tried to take bullish from here, from this low, to try to break this high and this high, right? Then price flipped. So therefore, that was that supply zone now that we're looking for, right? Now, vice versa, going bullish. When we're bullish, we understood that this over here was the last area, actually, right here. This was the last supply zone, right there, okay? And so therefore, we knew that this demand zone here was not mitigated right there. This is supposed to be gray, okay, just like that. Okay, and if this is our last failed supply zone, then we know that this was not mitigated. Therefore, price came to this demand zone right there. So now we know that we're buying here, right? That's what we're looking for buys, right? If I zoom out here, notice what happened here, right? We had the last buy to sell, right? So this area here was never mitigated until price got here and here, right? This is all mitigated now, right? So that's what I'm marking out. I'm marking out the failed supplies and failed demand zones just so I get an idea of where price has been and where price will go to next, okay? Because we trade off of weak supply and weak demand, okay? We prey on the weak, essentially, in Royal Blu FX, okay? So continuing from here, you can see that prices are bullish here on a 30-minute, right? So once I did all this analysis, now I'm understanding that we have weak buy to sell here. There's a weak demand zone, right? So I have to go on the lower time frames to see what's going on. Okay, so now notice that everything here is large, right? Large structure, right? Large supply and demands, right? Now I'm going to do the same thing on the lower time frames. When I go on the lower time frames, here's the 3-minute, right? This is the it says 2:57 right there. So 3 p.m. is when London opens, right? And this is where I'm looking for price to react from. Now, I'm not just trading. I'm not selling from here right away as soon as price opens. Although there are times when price, you could do that, right? But since we're in the supply zone here, right over here, at any point in time, price could just, manipulate you and run the opposite way, right? So that's why we have to wait for price to do something, to do something in order for us to react from price. Okay, so I am in fact wanting price to come bearish. Okay, that's what I'm actually looking for. But does that mean I'm going to enter from this point of view? No, because a lot of times when price comes into supply, just like this, and hits the outer zone of supply or demand, a lot of traders typically start selling from here, right? And that's considered to be manipulation. You know, it's manipulating traders to get short, right? And then price takes these guys out, right? Goes right into the 50% right here, the 50 EQ or above the 50 EQ, and then starts to go bearish like this, right? So let's see what happens here, right? So we're going to play it, right? Here's the open. Notice what happened right here. You can literally see that's 3 p.m. right here, right? 3 p.m. took out these guys, just like I was saying, right? Tap the 50, right? And then from here, prices are going bearish. Boom, just like that, right? Now, typically, this is where my entry would have been, right? But since I know that the major structure is going bullish, why should I be selling against a major structure, the major structure going bullish, right? As we saw here on a 30-minute, right over here, right? You can see the high was broken here. This was our last sell to buy. This was the last failed supply zone, and demand took over. And so this is why I'm looking to buy in here, not to sell, right? Because this high didn't actually break the low down here, right? It didn't actually break. And as you can see, we're all bullish. So we're looking for buys. Let's go back down on a 3-minute, okay? And so now once this has happened, right, we're just kind of waiting for price to get there. Prices are being bought here by other traders who are thinking they should be bought, prices should be buying, right? And then this is what we get right there, right? So price comes in here again. Let's go down on the 1-minute. Okay, here you can see a lot of traders are buying here, right? Again, at the open of the zone, at the top of the zone, right? Not inside the zone. So traders are getting manipulated here too, right there. Boom. You see that? People got swept. Traders got swept. I'm entering in, right? Just like that. Boom. And then now we're holding this until this area here, because there's no knowing if price is going to break above this high. So what we are doing is we bought here, right? And we're just monitoring price, obviously. It was very slow for London today. We're holding it until we hit that supply, just like that, right? And now I could do the liberty of just watching price here and seeing if price fails, right? If supply fails here, because that's what I'm looking for. When you're buying, you're looking for every supply zone to fail, right? Because we're buying. So in theory, all supply has to fail. And here, right, once we tap supply, I'm looking for supply to fail, demand to take over. Once it does, then I'm in for the next entry. However, I wanted to be safe and conservative here to take 3.1% for the winnings here, right? Which was good. So on to the next, right? Let's watch what happens here next. Okay, price runs up a little bit, comes right back down. Now I reposition myself again. Now why do I reposition myself? All this here internally is all liquidity, right? This is the last demand zone here that took place. And what I typically do is I follow reaction points. So if we go to, let's say the 15 maybe, or maybe the 5, yeah, the 5 is good, right here. You can see here we have a reaction, right? This is a sell, right? So supply's weak right here. Supply tried to go bearish, try to break this low, but then price flipped. So that means this here, this demand right there is my next area for price to get to in order for me to go bullish from here, right? Although I am monitoring demand in here, we know that we are really high in price over here. As you can see, this is too high. So what you always want to do is follow the major structure, supply and demand, and then only consider all this as really just liquidity, internal liquidity, right? You can see here we had another reaction right there, right? So there's your sell to buy right there. This is also another buying area here, right? If other traders wanted to buy in there, right, it's totally fine, right? Because prices could have gone up here, right? But this is where I anticipated. This is the more high probable trade and or entry for price to get here in order for us to go see price bullish, right? So now that price is going bearish, you can see that we had where was it? Prices flipped here, right? You can see there's your buy to sell. All this is liquidity here. Price comes in here. I would have done a 50 EQ here and enter off that 50 EQ, right? And risk above. I always do the risk above the zone, so that way the wick doesn't take me out like it sometimes does, right? Like sometimes the wick just goes above or below your supply or demand zone and takes you out. Anyway, so prices are going bearish. I still have my bias bullish here. You can see right there. Look at that. Buyers came in here, right? There's the, if you look at there's the wicks that people bought, sold, got manipulated, right? I entered on the 50 right there, right? And then prices took off from here, right? So right here is our last supply zone. You can see sellers try to sell it because they thought this was a bearish trend, right? When in fact everything was bullish. And then we had the high swept, right? And now this is my next area for buys, right? I didn't buy there again. Obviously, I just you know, held one trade here, bought here, and then targeted this high, just like that. Okay. Now that's what it was. That's all I had today, right? And you can see the only reason why I buy at the 50 is because prices always more times than not come to the 50, right? And I always try to, it's all about risk management here, and we're gonna talk about another video about risk management. But you know, typically, just in a nutshell, I typically enter from the 50 just because I know price usually comes below or into the 50, right? Rather than me entering here and having to risk, you know, say more than this entire 1%, right? I'm risking just 0.5%, right? And I'm being very conservative when I do this. And a lot of times, sometimes price does come below the zone like this, right? Clearing out more liquidity, right? And my stop loss is right here, right below here. So the wick price will come out here right below the wick and just go like this, right? And just take everybody's stop losses and run the opposite way. So this is why you can see here I put my stop loss right below, or my risk below, just like this, right? All right, so on to the next trades that we took. This was, I believe this was a Tuesday. Yeah, it was a Tuesday right here. As you can see here, it says Tuesday the 23rd. So I'm going to back it up over here, show you guys what I did. And I believe this was like the actual open. Again, let's just zoom out here so you guys can see what I'm doing, right? Normally when I do all the analysis in the higher time frame, price doesn't actually really move that much, right? And you just have everything in your head, and you're just waiting for certain actions to happen on the higher time frame. So I'm very much comfortable doing that when I do the higher time frame analysis, because it gives me a lot of time to sort of you know, gather my thoughts and ponder about what price is going to do next, right? So over here, it didn't move that much from Tuesday, obviously, because this is Thursday over here. But again, price comes into supply, right? Here's my next demand zone here. You can see here we had a buy to sell, so there's supply there, more failed supply to demand that took over, and this is where I was typically looking for buys, right? But price was actually all the way there at the high when I first started out, and I'll explain the theory why I started selling from there. Now, right here, if I zoom out, right, again, you can see this is your last buy to sell, right? All this is internal liquidity. Everything in here is internal liquidity. So we just broke this high here, right over here. We just broke that high. And typically when we break a high and when we're inside the supply zone here, prices do actually move, right? But I'm not trying to sell from this high. Oops. I'm not trying to sell from this high all the way down here. That's not what I'm doing. I'm just trying to capture the current day's move, right, in that current day session. So I knew it was going to move some, but you know, maybe not for the entire, like, you know, week or whatever. But anyway, I hope you guys get what I'm saying here, right? So once price broke the high, this is the next demand zone, right? Over here we have a failed supply, a buy to sell here. So that's also another flip zone right there, which I did not highlight, right there, right? So we're expecting price to sell off from here. Let's go down to the 1 minute, and here we are. Okay, so actually let's go back to the 30-minute quickly. Here is, if you can see, there's your buy to sell, right? This is supply zone. There's your sell to buy here. That's a failed supply to demand. So this is where I was actually targeting for the first targets, right? You can see the first TP, second TP. I did that 50 EQ. Look, you can see over here, I targeted that 50 EQ. Although I know I don't normally target the 50 EQ. I normally target the top of the zone right over here, right? But you'll see why I did this in a second. Okay, so it is 2:59. London's just about to open. I clearly see here we had a failed buy to sell here. So this is where supply is responding. Right here you can see supply demand's a weak, supply just took over. And I'm looking for prices to respond from the supply zone. So let's see what happens here. So notice how prices are going bearish, right? This is an area to buy, but I'm not buying here because I'm not looking for prices to run high, right? So let's watch what happens. Prices go up, tap the supply zone, right? And now we clearly understand that this demand here was not able to break over this the new high, and prices are weak now. Supply is strong here, which means this is where we're looking to sell from, right? Just right here. So actually what's funny, I did this wrong. It was supposed to be here, right over here, this low to this high, right? This is how I mark it out, and this is where I would have actually normally taken from the 50 EQ, but instead I did this. But in any case, I caught the trade. So what we were waiting for is price to get back to the high, right? You can see there's your failed demand to supply. We're waiting for price to get back up, right? This low here clears out all the liquidity to use price bullish, and then that's where we entered, right? Boom. So had I done this, you can see here the 50 EQ is tapped, right? You can see that. So that would have been ideal, right? You can see how I'm risking way more than I should be, 4.4 pips obviously, but I would have been able to risk at least half of that obviously. So 2.2 maybe percent. 2.2 pips on this, right? So I entered there, right? First TP got hit there, right? I was glad. I didn't take partials. In fact, I put everything at break even here for that, because, and the reason for that is because remember, this is the top of the zone right here. Look at it right here. Everyone's trying to buy right here, right? But this to me is not mitigation. It didn't mitigate price. It didn't do anything there. So it just tapped. It's just tapped the top of the zones where people think prices should be bought, right? And then price comes in, takes everybody out, and we're going into the 50 right there. So let's watch what happens, right? I'm not piling up any more other positions here, although I could have, but I didn't do that, right? And they're just about TP'd over there. But when I'm so close, this is sometimes it's like when I'm in here, I just get out. Sometimes it may or may not tap the 50, even though I want it to, right? In that case, I just got out of there and then just, let price do whatever from here. And then there we go. Like, see that, right? That would have been a nice. Oh no, wait a minute, I did. Yeah, price pushed up, right? This is your next supply zone right here. So I would have cut that in 50. I didn't take this entry, by the way, but this is your next entry right there, obviously. Now here's your next entry, your next supply here to go bearish here. Let's continue here, okay, because we just wanted to see what price would do. Can price hold this demand? It did not hold this demand, as you can see. So we had another failed buy to sell that happened there, right? Now, here's what's interesting. Oops. Okay, I'm looking for buys here. If I go on a 30-minute, do that there. All right, notice that right here, this is our last sell to buy. So I mark out this demand zone here, right, 50, and it hits my 50 EQ right there. And this is more of an aggressive entry, not a confirmation entry. A confirmation entry would normally and typically I would look for prices to exchange in here, but instead I just wait for the 50 to be tapped, right? And I'm only getting in and out. Excuse me. I'm only getting in and out fast, right? There's that nice rejection right there, right? There we go, right? The weight of this is so strong that prices is willing to push bullish here, right? Because we understand that there are buyers here, right? Now here's where price, I could have had confirmation here, although I didn't want to take it because I just entered here already. You can see right here, demand took place, right? Then there's your supply, right? So we understand that supply over here tried to go bearish here to break this low, but then instead flipped, right? And so this would have been your entry right here, right there, right? So this is where we would look for price to get to, and I would cut that in 50, just like that, enter right below the 50 here, right, with the risk running right the low, with my risk running right here, right? Anyway, long story short, I entered here, and I only tried to be safe here, right? I wanted to be safe. I held this just as much as I could to just before I wanted to get out, you know, before I could get out. And that's what happened, right? So I got out of there because once I understood over here supply was strong. You can see over here, where was it? Right here. This demand. Let me just go back out over here. And this is ways you can manage your trade too, by just watching what price is doing, right? You can see here supply took over, right? Demand tried to go up, and then you can see the next candle. See that? That means supply is strong, demand is weak, which means I need to get out of this trade, right? So once price did that, we just got out right there. As soon as price got up a bit, and I just got out. And in whatever reason, price could go up, you know, but obviously I need to be conservative here, not aggressive, and just get out from this trade as soon as price did this, right? And that was it. Now, price actually, you can see here, this is a buy to sell right there. Price did actually react to some more supply zone, another supply zone there. If I zoom out, you can see from this low here, right there, this was your last buy to sell, right? So this, when price broke this low, it never mitigated. It just left all this liquidity here, right, for this supply zone to sweep, to continue, right? And there you go, guys. So there you have it. Those were the trades I've taken, right? I hope you guys understood what I've been actually talking about. If you guys like this video, please throw a huge thumbs up, and definitely comment on the section below, because I definitely respond to everybody, and I definitely want to see what everybody's thoughts are in terms of how I traded. So until then, guys, I will see you in the next.